Hello friends, in the series on the income tax cases, today we will discuss the case of Assistant Commissioner of Income Tax versus INOX Layer Limited. This case has been reported in 105 ITR Tribunal Short Notes 3 and the matter has been decided by Ahmedabad ITAT A bench and the date of the judgment is 16th June 2023. In this case, a very limited issue was there before the Honorable ITAT that if the assessee is in the business of entertainment and running multiplex theatres all over the country, and if the state government gives any entertainment subsidy for the development of the entertainment and multiplexes across the country, then the nature of the subsidy will be revenue or capital, or in other words whether it will be taxable in the hands of the assessee in case it is revenue in nature, or it is exempt if it is a capital receipt. The facts of the case are like this. In this case, all we know, INOX Layer Limited is a company who is in the business of entertainment and it has multiplexes theatres across the country. The company received, the assessee received entertainment industry from the state government, which was for the development of the entertainment, which was for the promotion of the entertainment and for developing the multiplexes theatres across the country. The assessee treated this subsidy as a revenue receipt, as a capital receipt. When the assessment proceedings were going on, the learned assessing officer was of the view that this amount is revenue in nature and it should be included into the taxable income of the assessee. If we go to the core issue, then even by the general sense, or you can say general knowledge, if any company receives any help from the government and if it will be straight away will be taken to the revenue receipt, then a very major bite of that subsidy will go again to the government. So that cannot be the intention of the government in giving the subsidy to the various entities. So in this case also, without going into the integrity of the or into the nature of the subsidy, the assessing officer straight away took this amount to the revenue receipt and taxed it accordingly. Because as all we know that if there is any issue, then it is the mindset of the assessing officers that they took into taxable income of the assessee and left it open for the litigation. So the assessee has to bear that cost of litigation and the time involved. This is the general practice of all the revenue authorities. The revenue authorities nowadays do not apply their mind and they straight away tax that amount and it is left open to the various courts that you have to decide now. And even they are not following the precedents of the various courts. This is very unfortunate for the taxation system of India. So in this case also, the assessing officer taxed the entertainment subsidy. When the matter went to the CIT appeal said that depending upon the facts and circumstances of this particular case, as it appears on the face, this amount is not in revenue in nature. This is capital in nature and it should not be taxed. Department, as usual, without going into the merit of the case, filed the appeal into the ITAT. The ITAT also upheld the order of the CIT appeal, which has given the relief to the assessee by saying that the entertainment subsidy received by the company for the development and promotion of the entertainment and development of the multiplexes theatres across the country is a capital receipt and not a revenue receipt. Friends, the purpose of this videos is to just give you a trigger point or a kick that we can start or we can have some footing into the litigation of income tax cases. At the end of this video, once again, I am repeating the name of the case. The name of the case is Assistant Commissioner of Income Tax versus INOX Layer Limited, and this case has been reported in 105 ITR Tribunal, Short Notes 3. The matter has been decided by Ahmedabad ITAT A bench and the date of the judgment is 16th June 2023. Thank you, friends.